Hello traders, Vladimir here from Traders Academy Club, and this is the second video in my series of videos covering the popular and common mistakes Forex traders do, and I offer my solutions to the problem, to the mistakes. But before I dig deeper and covering today's mistake and the solution, if you are new to this channel, first of all, welcome to our fantastic trading community. I would like to invite you to subscribe to the channel and to join our trading family in Traders Academy Club. You can find the links to that below this video in the description or in the pinned comment inside the comment section. So today's mistake I want to talk about, and a very common problem traders face when they do these mistakes, it's revenge trading. A terribly insane mistake from my point of view, and I allow myself to say that because I myself been doing these mistakes way too many times in my trading life. What is revenge trading, and how I think it's fair to deal with that? Now, I want to say that before I move on, I suggest a solution the way I see that. You can agree with me, disagree with me. You can say, wow, Vlad, this is brilliant, or you can say, Vlad, you are something wrong. Totally accepted, and I totally respect your view. I just wanted to create this video to share my point of view and suggest a solution that works for me and works for my students. Okay, if you think you can share something from your own experience, please do so in the comment section below this video, and your help and support other traders that will watch this video is very much welcome, and thank you very much for that in advance. It's much appreciated, of course. And also I would like to ask your help. If you find such videos helpful, please hit this little like button below the video. You know, YouTube algorithm needs these little things to keep showing this video to other traders, so hopefully it would be helpful. Again, the problem I'm talking about in this video, revenge trading. So what is the revenge trading? It is this feeling that you get after you have a loss or a losing streak. Okay, then you start like, oh, especially if you had a good winner before, then how come I lost something for my money? And then the revenge comes in. You start to look for setups that you shouldn't. You start to trade off hours that you shouldn't. You start sometimes to go and do bigger numbers in terms of risk, something that you shouldn't, right? All that, it's like a snowball. It starts tiny, but it grows and it grows and it grows and it grows, and eventually could lead to very bad place in trading. So this is a very common mistake. Don't think if you do that something is wrong with you. Everybody later or sooner do that. Well, almost everybody. Some people are, what can we do better, and they can avoid such mistakes, understanding that without going through that. Unfortunately for me, it was not the case. It wasn't the case. I did these mistakes way too many times. That's why I allow myself to be here and to present this mistake to you, to mirror face it to you, and hopefully you would like and apply some of the solutions that I have here. So now that we know the mistake, what is the solution? The good part is that there are solutions to almost every problem, and as always, it starts with acknowledgement. Recognize it, name the problem. Okay, when you put the title to the problem, then solutions can come up. The problem is that most people simply like they deny, right, the problem. They say, nah, I don't face it. Subconsciously they know they do, but they deny and they fail to accept it within themselves. And as long as you close the door for acceptance, your inner doors, right, then the chances to find a real solution and change something are zero. So what are the solutions? So first of all, as discussed, acknowledgement, but let's assume you already did. Here is the first solution. If you want to avoid this feeling of revenging trading, try to reduce your numbers. Many traders trade way above their abilities. With accounts like $500, they make crazy leverage, and leverage is problematic. It's like it's a drug. Once you start with that, good luck with stopping with that. It's almost impossible. So try to go lower on your numbers, okay? Because if you are able not to get too emotional on the numbers, then you start to carry less of a loss. Let's say you have $1,000 account. What would be more painful to you? To lose $50 out of it? To lose $200 out of it? Or to lose $10 out of it? So I assume the answer would be 10. Let me know in the comments what would be your number you would accept. For some it could be 50, but for almost nobody it could be the 200, unless you don't care about your money. Because for most people who trade with $1,000, this is a hard-earned money and they don't have too much more than that to risk. So the first thing, the first solution I would like to suggest, go lower in your numbers until the level your emotions are controlled. Okay, and it works in both ways, because yes, from one side your profits would go lower, but on the other hand you would not be exposed to the negative emotions that would eventually lead you to do more mistakes and lose all your profits, or even worse, burn your account. The second solution is mirror your trades. Okay, track record your trades and put it as a mirror in front of your eyes. And I call it a track recording or trade journaling. Let me show you what I mean. So here is an example. Again, it's just an example, very, very, very basic, but I want to give you something to work with. So this is a trading journal. What does it mean? You put the information here, okay, all the required information that you have about your trades. Okay, you start with first week, second week, etc., 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 and you start to put it, the pair name, the instruments you trade, the direction, if it's sell or buy, the time frames you work with, the screenshots for entry so you can review your strategies, and some basic information to know how you are in terms of numbers. So in initial risk, for example, 1%, you can go lower or bigger, depends on your risk management, of course. Initial reward and the final reward. Very, 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 very important thing. Why is that important? And here is a very, well, from my point of view, interesting part here. So take a look what happens with the initial reward and then the final reward. Okay, let's go for example for a second in a blank screen. Just go blank screen here. Okay, and here is, okay, a plus and a minus. So that's what you earn. Let's assume you are risking 1%, just for example, and you are going with more than 1%, let's say bigger than 1% in your targets. Okay, so you risk 1%, let's say you lost it, then you have a big winner, then you lost again, okay, then some smaller winner. But here comes the interesting part. The next time, instead of revenging this loss or the streak, instead of going and make this terrible mistake, you should try to do is controlling this. How? By cutting earlier. There are certain techniques how to cut your loss earlier, and I teach many of them in real time in Traders Academy Club, and I would like to invite you once again to join us and see how I personally cut the losses earlier. But there are many different techniques, and of course, some things might work different for you. So the most important thing you should understand, if you are able to control a loss, even not all of them, because not always we can control a loss, but if you find a reason, technically speaking, to cut a loss and you end up not with -1, but only 0.5%, and the next one 0.2%, then look how much money you saved here. Okay, and here you saved plus 0.08. What you didn't lose stays in your positive column. Make sense? So when you understand this part of the numbers, then what you get is basically here. Initially, you see that I risk 1%. I want to take bigger numbers. All of my trades are at least 1-to-1, and most of them are higher. Okay, and I go with final reward. Here I just cut on break even because there was no momentum. Here I cut before the final profit because there were signs, technically speaking, cut before. Here I couldn't do nothing, so I lost. And this is a mistake I did, by the way, right? That I misjudged a trade and I lost for that. I paid for that. But then you see, instead of here, I cut earlier, and here how I control the losses where I could, right? I wanted to go bigger, but I cut it earlier because that's what the market told me to do. And here as well, I wanted to go bigger, but I had to cut. There was signs against me. I'm not going to continue because the chances it will lose eventually are bigger now. So when you control the numbers of your losses and put it in a journal, then you understand that there is nothing to revenge on just one loss or a streak of losses, as long as they are controlled, or just it's part of a bigger picture. The problem is that when you don't look at the numbers and you just go with the fact you lost, people with a personality that hate to lose, like myself, would go and look to revenge. Revenging on the market, it's terrible mistakes. Imagine like you are in a boxing match, or you're wrestling or playing soccer, and you just get someone scored you. You start to rush to score, and when you rush to get paid back, you start to do terrible mistakes. And you know that you're exposed to worse mistakes to happen to you. And the final solution I want to discuss about is the acceptance of negative emotions. Look, most of the old school educational things will tell you trade without emotions. That's 100% true, no argument. However, we all are human beings. How can we disconnect from emotions? At least I did not find a formula for that. Therefore, I was looking for different solutions, and that's accepting the negative emotions. Once I feel the negative emotions, like a revenge or like forcing a trade or anything else, my instant solution is closing the computer and get out of my office, because I know if I'm in a negative zone, in a negative mode, the chances for a mistakes are almost 100%. And because of all this experience I gained during the years, I know my best solution for myself is just step back, calm down, and come with a fresh mind back to the chart and try to find better opportunities, or just accept a loss. If you have a bad day in the office, when you leave the office, all you want to do is go back and smash someone or something just to make things better. You go back home, you relax, you come tomorrow, and your brain functioning better, thinking clearer, and the chances you would be able to find better trading opportunities and do better trading decisions, these chances go much, much higher. Okay, so these are the solutions I have for the mistake traders do, revenge trading. This is a huge problem. Do you have any other solutions rather than me? If yes, please share in the comment section below this video with other viewers, and hopefully it will help them to avoid this mistake and deal with that better. And that's pretty much it for this video. And once again, if you enjoy these videos and you want to see more of them, please hit the like button, drop some feedback in the comment section. Your help is very much appreciated and needed to work properly with the YouTube algorithm. So thank you very much for your time. I invite you to join us in Traders Academy Club and enjoy all our real-time trading ideas, real-time trading education, and supportive environment in your trading journey. The links are below in the description or in the pinned comment. Thank you for your time. Stay safe, be well, and I'll see you soon with more videos. Bye for now.